Hey YouTube, this is Zach with Achilles Financial, and today we're going to be making our STEM Q2 earnings preview video. So if you are watching this after 5 p.m. Eastern Time on August 4th, then earnings have already occurred, and we are going to be watching, or I would encourage you to watch for the earnings review video. So this is simply going to be a few of the things that I'm going to be looking for based off of last quarter's earnings as well as recent stock movements. It has been a very, and I will repeat, a very good few days as it relates to the stock market for STEM. You can see on the 3-month timeline here that the stock's been trading in this $7 to $9 range all the way up really until the beginning of this year. And so you can see that it's been trading in that range, especially since May. We've been playing it via covered calls. I've had a number of videos on the channel that showcase that. Those calls were exercised last week, and so since then they've actually gone up significantly higher. So the stock has made more than a 50% move from its low. I think a month ago today it was, or it's now up like 70%. So you can see the stock currently sits at $11.75. And a large portion of this, you can see this large jump that happened last week, is due to the fact that the bill in the Senate, or at least a preliminary bill for the Inflation Reduction Act, which is a massive climate and clean energy bill, amongst other items. There's a lot in that bill, but one of the key things is a number of provisions that is going to benefit green energy, which STEM is in that world. So the stock's done very, very well there. However, that leads to a number of questions going into earnings, as the market capitalization is now up more than $500 billion. So the market capitalization of this company is up significantly right before earnings. So that sets very high expectations, because when we look at the overall valuation for a $1.8 billion company, you can see that the price to sales has changed pretty dramatically. Last time we were talking about this, it was more in line with this kind of industry standard. Now we're seeing STEM being the leader, which there are pros and cons of. And this is what we're going to be watching on a go-forward basis. So some of these metrics, we'd love to see some profitability. But the company is now up huge. However, this is based off of sales that are not necessarily worth $1.8 billion yet. They need to grow. So one of the things that we're going to be looking at is, if we look at the income statement, is going to be the revenue metric. So the company continues to perform quite strongly when it comes to bookings. This means that they are continuing to sign deals. The revenue component is going to be when they are delivering on those deals. So you can see here by way of revenue that the company hit 16% of their full year target last quarter. This quarter is supposed to be an expected 15%. So you can see right there, they are currently sitting $41 million. On the trailing 12 months, we are currently just north of, or right at about $140 million. What we're going to be looking here is another strong performance to represent or potentially be around this 41 to 52 million mark per their expectations. We have not seen any guidance that's come out to say whether or not this is going to be the case. However, something we're going to be watching very, very closely here at the bottom of the screen is this net income. So these prior two quarters in Q2 and Q3 of last year are going to be related to the sales of some warrants and the execution of some warrants, which is what you're seeing in terms of some crazy items in there. So Q4 of last year, Q1 of this year, much more realistic expectations, and they are still burning cash. So that is a concern. They are not a profitable company at this point in time. However, the cash balances continue to perform quite comfortably. As such, I'm not overly concerned. You can see that the company as of Q1 is currently sitting on around $352 million of cash and short-term equivalents. What we want to be watching associated with these two items is if that cash burn picks up, which generally it does when you're trying to grow a sales organization, when you're trying to grow that top line number, this can pick up, and they may look to issue more shares, especially as the stock price climbs up more than 70% from where it was just a month ago. So we're going to be watching that number, make sure cash stays strong. There's a few other items I'm going to be looking for not related to the stock page here on TD Ameritrade. So let's dive over to the last earnings report for that. So this is the STEM Q1 2022 financial results. You can find it on their website, and I'll leave a link in the description down below. They've got a ton of metrics in here, but we have talked about those a number of times. So what are we looking at? So some of the things that I'm expecting is when we talk about storage systems, this is supposed to be like 85% of their total full year expectations by way of revenue, which is great because it says they secured 100% of that via fixed prices. So we shouldn't see the major effects of inflation there. That being said, we should still see increases to transportation, to salaries, to other variable costs. So I don't believe that they've got the inflation licked, and I do expect that to impact the overall company. You can also see that in the solar asset performance management, which is going to be the other remaining 15% of expected revenue. They are evaluating cost containment, so they expect that to go up. They do talk about that in here. So we want to talk about A, supply chain and cost management, and B, we want to talk about solar and in particular the supply associated with that. As we go down on some of the other key components, we've got strong revenue growth. We have to see that gross margin continue to increase. In particular, I'm looking at the GAAP gross margin. This has to get better, otherwise the company's never going to be able to get a profit going, and we need to see clear line to profitability in 2023. That's what they've been talking about. That is the expectation, if not on a GAAP basis, then at least on a positive cash flow, but we can't see everything just be adjusted EBITDA. That's not going to cut it for me. You may like that as a metric for you. And so you can see in terms of operating metrics, I want to see that backlog continue to grow. That means that they are closing more deals than they are delivering on. That is a great position to be in. So we want to watch that continue. They did have record backlog as of last quarter, so we want to see that continue, as well as these other metrics as well. But that's the one that I'm going to be looking for, is that backlog. As I mentioned earlier, we want to see that revenue grow. This quarter is expected to be at 15%. Last quarter was 10 to 15%, and they came in at 16. I would not be surprised to see them come in at 16% again, or have a nice little beat on revenue, such as 45 million. But the fact of the matter is, this needs to be another big number. So this is what we'll be watching going forward. The nice thing is, depending on their business model, which I haven't seen a question on this, but by way of bookings, the question is, when do they start to get the cash for some of these deals? If it is upon signature, that could help their cash position and could continue to funnel the growth. So we want to continue to watch this. We want to see these numbers grow. I'd love to see about 45 million. I think a miss on top line revenue is going to be a very painful experience for the share price, as we saw when they had their miss on their Q4 earnings, which that was a big miss, and they did not prepare the public appropriately for that. It's been pretty quiet over the past few weeks, so I think that this could come in slightly positive. Again, I'd love to see at least 45 million. That's what I'm going to be watching for, about 45 to 47. The last thing that I will call out here from the financial operating is going to be, once again, the clear path to profitability. The net loss number, I'm expecting another net loss. We want to see the commentary on guidance for the remainder of the year, as well as going forward, what do we expect profitability to look like? So these are just some of the things I'm watching for. I'll talk about it on Twitter. I'll talk about it in the Discord, which is linked in the description down below and is free to join. There's a number of awesome individuals in that Discord who are following the stock closely as well and providing some great feedback. So feel free to join and talk about it there as well. So if you find this content helpful, please leave a like and subscribe. Thanks for watching if you made it this far, and I'll talk to you later.